Florida was never supposed to crack. For years, the Sunshine State looked unstoppable: sun, salt air, and record-breaking prices that made homeowners feel like geniuses. But in 2025, that dream didn't just fade. It collapsed. Condos once selling before the paint dried now sit dark and empty. Buyers are walking away from deposits worth tens of thousands. Developers have gone silent. And the governor, the same man who called Florida's housing boom a model for the nation, is suddenly facing a nightmare he can't spin. Because when the numbers stopped climbing, so did the illusion of control. What triggered it wasn't a single storm or one bad policy. It was a chain reaction that spread through every corner of the market, from penthouses in Miami Beach to starter condos in Sunrise. And it all began with one dangerous assumption: that the good times would never end. But they did. And the first crack in the facade came from an industry no one expected to disappear: insurance. Just a few years ago, South Florida looked like a paradise that printed money. Over 330,000 new residents poured in, retirees trading snow for sand, investors wiring deposits from New York and London, remote workers escaping high taxes for ocean views. By late 2024, the median home price had shot past $410,000, a 19% jump in just 1 year. Two-bedroom condos that once sold for $350,000 were now topping $600,000, sometimes before they even hit the market. Bidding wars, cash offers, and 48-hour closings became the norm. Developers couldn't pour concrete fast enough. Influencers filmed poolside tours while billboards along I-95 screamed, "Your dream home awaits," but not for long. The governor loved every second of it. He cut ribbons, posed for photos on half-finished towers, and told anyone who'd listen that Florida had cracked the code on prosperity. Jobs were up, prices were rising, and migration numbers made national headlines. To the outside world, it looked like paradise perfected. But beneath the sunshine and sales pitches, the foundation was already shifting. Builders were overextended, insurance companies were uneasy, and economists were whispering about a storm forming on the horizon, a financial one. Before we dive into how it all started falling apart, make sure to like this video. It helps the channel reach more viewers who want to understand what's really happening inside Florida's housing market. Because the next part of this story explains how paradise turned into panic almost overnight. At first, it seemed like a few bad headlines. Then it became a crisis. 6 major insurance carriers pulled out of Florida between 2022 and 2025, leaving over 600,000 homeowners scrambling for coverage. United Property Insurance, one of the largest coastal providers, vanished just weeks before hurricane season's peak. Overnight, tens of thousands of policies were canceled. Closings froze. Deals unraveled. Mortgage lenders refused to fund loans without proof of coverage. Condo associations couldn't renew master policies, no matter how much they offered to pay. For buyers, it was chaos. One email from their insurer could erase months of work and tens of thousands in deposits. Agents started calling it the insurance apocalypse. Every time a carrier collapsed, the fallout spread. Premiums tripled, deductibles spiked, and many homeowners were pushed into Citizens Property Insurance, the state-run backup program never meant for this kind of volume. By mid-2025, Citizens was covering 1.3 million homes, nearly 1 out of every 8 in Florida. For the first time, the dream of owning a condo in paradise came with a cruel question. Could you even get insured long enough to keep it? But the worst part? Insurance was only the beginning. What came next would make the meltdown look small. By 2025, owning a home in South Florida wasn't about luxury anymore. It was about survival. Insurance premiums didn't just climb, they exploded. The average homeowner in Broward County now paid over $6,200 a year, nearly triple what they paid just 3 years earlier. That's another mortgage, just to stay covered. Condo owners faced the same nightmare. Annual bills of $6,000 or more, plus special assessments that hit like lightning. $5,000 here, $10,000 there. And if you couldn't pay, you didn't just lose coverage, you lost your home. Retirees who thought they'd coast through their golden years suddenly faced impossible math. Young couples gave up on buying altogether. And for many first-time buyers, one insurance quote was all it took to end the dream for good. Lenders didn't care that coverage costs were out of control. No policy meant no loan. So thousands of deals died mid-closing, buyers walking away heartbroken while agents tried to patch the pieces together. For some buildings, the insurance crisis became a death sentence. Older high-rises near the coast couldn't find a carrier at any price. Entire towers went uninsured, their values collapsing almost overnight. It wasn't just a housing problem anymore. It was an economic fault line running through the state. But what followed next proved how fragile the boom really was. The Florida condo market had been a rocket for years, until it ran out of fuel. By summer 2025, mortgage rates shot past 7%, turning every showing into an awkward math problem. A 30-year loan on a median-priced condo now cost more than $2,100 a month, almost double what buyers paid just 3 years earlier. That extra $1,100 wasn't pocket change. It was the difference between owning and walking away. And people started walking. Nearly 41,000 condos sat unsold across Miami-Dade, Broward, and Palm Beach, a 61% surge in just 1 year. Listings that once vanished in days now lingered for months. Agents who used to juggle bidding wars now chased callbacks that never came. Buyers backed out over the smallest issues: a missing inspection report, an expired wind mitigation form, or one bad line in a master policy renewal. Even solid offers fell apart. One young couple in Sunrise lost an $18,000 deposit when their lender pulled funding after the building's insurance lapsed. They had done everything right and still lost everything. Sellers dropped prices. Investors retreated. The same headlines that once shouted Florida's unstoppable market now whispered inventory glut. But just as the market froze, something else started brewing off the coast. And it wasn't just another financial storm. September 2nd, 2025. At 5 a.m., the National Hurricane Center issued its advisory. Hurricane Erin, Category 4, 130-mile-per-hour winds. The cone didn't aim directly at Miami, but it was close enough to terrify everyone from South Beach to West Palm. Within hours, inboxes across the state lit up, contract on hold. Escrow release requested. Buyer invoking hurricane clause. By noon, half the condo contracts in Miami were canceled or frozen. Developers watched entire pre-sale floors vanish from their books before lunch. Title companies paused all closings. Banks refused to fund loans anywhere near the storm's path. In Fort Lauderdale, agents compared their dashboards, every one of them bleeding red. Buyers were gone. Deposits forfeited. The market didn't just slow down, it flatlined. Condo boards scrambled to update insurance certificates, but no carrier would touch new policies with a hurricane on the radar. Associations locked down elevators, taped windows, and yanked open houses from the MLS. By late afternoon, the entire South Florida market went silent, a forced shutdown triggered not by wind or rain, but by fear. And while homeowners braced for the storm, Tallahassee was already in crisis mode. Because this time, the panic wasn't just economic, it was political. As the winds picked up, so did the pressure. Governor Ron DeSantis, once the face of Florida's unstoppable housing boom, now found himself facing cameras for all the wrong reasons. Only a year earlier, he'd called Florida the envy of the nation, pointing to rising prices and endless construction as proof that his economic plan was working. But now, thousands of residents were staring at canceled policies, frozen mortgages, and condo associations on the edge of collapse. When reporters asked if the state would step in, his tone shifted. He blamed out-of-control federal inflation and fear-mongering insurance executives. But that didn't calm the public because people weren't asking about inflation anymore. They were asking why they were losing their homes. Behind the scenes, Tallahassee scrambled to contain the damage. The state-run Citizens Insurance Program had ballooned to dangerous levels, covering more properties than it could afford to pay out if another major storm hit. One leaked memo warned that if citizens faced even one catastrophic hurricane, the program could run out of funds, forcing taxpayers to cover billions in claims. The message was clear: Florida wasn't just in a housing crisis. It was sitting on a financial time bomb. And every decision DeSantis made from that point forward wasn't about growth, it was about survival. But while politics played out in the Capitol, something even darker was happening on the ground. Florida's migration boom didn't just slow, it reversed. By late 2025, moving trucks were headed out of the state faster than they were coming in. Families who once dreamed of oceanfront views now packed up for cheaper ground in Georgia. North Carolina, or Tennessee. Property taxes, HOA fees, and insurance premiums had turned their tropical escape into a financial trap. For the first time in over a decade, U-Haul reported more one-way rentals leaving Florida than arriving. Even investors bailed out. Cash buyers from New York and California, once the engine of the boom, started selling off units before prices fell further. Some were forced to slash listings by 20%, 30%, even 40% just to get out. And when those listings hit the market all at once, the illusion shattered. The condos that once symbolized Florida's unstoppable rise now became monuments of overconfidence, gleaming towers with dark windows and for sale signs flapping in the wind. The question wasn't who could afford to buy anymore. It was who could afford to stay. But even as residents left in droves, one group saw an opportunity, and their arrival would change everything. When regular homeowners panicked, the sharks smelled blood. Private equity firms, hedge funds, and real estate conglomerates started circling Florida's collapsing condo market like predators sensing weakness. They had cash and patience. As desperate sellers slashed prices, investment groups quietly began buying entire floors, sometimes entire buildings, at a fraction of their 2024 value. The same towers once filled with retirees and young families were suddenly being converted into corporate-owned rentals. Locals called it the second wave. Only this time, it wasn't families chasing a dream, it was corporations chasing profit. Within months, ownership maps in parts of Miami Beach and Fort Lauderdale looked unrecognizable. Where hundreds of small owners once held condos, a handful of LLCs now controlled entire blocks. It was consolidation on a massive scale, invisible to the public, but obvious to anyone reading property records. And while politicians argued over who caused the collapse, the new owners were already planning the next phase. Turn the crisis into an empire. Because in Florida, even a disaster can be monetized if you move fast enough. But not everyone was willing to give up so easily. By the end of 2025, the state that once sold the dream of endless growth had been forced to confront reality. Entire developments stood half-built, cranes frozen midair. Insurance premiums consumed paychecks. Vacant condos lined the coastline, their windows reflecting a truth no one wanted to admit. The boom was over. And yet, amid the wreckage, a few voices began to speak up, builders, economists, even former officials, revealing just how deep the cracks went. They said the collapse wasn't just about hurricanes or inflation. It was about denial. For years, everyone, from politicians to developers to everyday homeowners, believed Florida was immune to the laws of economics. That prices would always rise. That demand would never fall. That paradise was permanent. But the truth was simple. Paradise had been leveraged. And when the interest rates, insurance costs, and environmental risks finally aligned, the illusion snapped. Developers who had borrowed millions against future sales now faced bankruptcy. Insurance carriers who overpromised coverage were gone. And homeowners who once bragged about their property's value were now just hoping to sell before the next assessment hit. Local governments, desperate for tax revenue, began offering incentives to corporations, the same ones buying up properties in bulk. The result? Florida's housing landscape was transforming from an ownership paradise into a renter's state, controlled by faraway investors. Meanwhile, DeSantis's administration continued to downplay the crisis. But with budget deficits rising and citizens' insurance near insolvency, whispers of federal intervention started to circulate. Online, Floridians vented frustration. Forums filled with stories of canceled closings, unpayable insurance bills, and dreams deferred. Hashtags like #FloridaHousingCrisis and #CondoGate began trending, pulling national attention back to the Sunshine State for all the wrong reasons. But behind all the headlines, one question kept surfacing. Can Florida ever recover? Maybe, but it won't look the same. Economists warn that rebuilding trust in the market could take years. Developers are pivoting to smaller, inland projects. Banks are rewriting lending rules. And homeowners, the ones still holding on, are learning to live with an uncomfortable truth. Florida's paradise was built on fragile ground. And when the foundation cracked, the dream went with it. Still, one thing about this state never changes: its resilience. Every collapse in Florida's history has been followed by reinvention. The people who stay will rebuild, adapt, and find new ways to make the dream work. But this time, they'll do it knowing how easily it can all fall apart. Because if Florida's 2025 condo crisis taught the world anything, it's this: even paradise has a breaking point.